Thanks for tuning into this leg of Profit Insights. What we are trying to dissect over this segment is the rise in demand for commercial real estate as an investment alternative. It forms under the whole alternatives bucket of conversations and coverage that we've done. And we talked to Anshu Kapoor, who is president and head of Nuvama Asset Management, and they've launched a very interesting vertical, if you will, on real estate side. Anshu, in your own words, you're trying to build out an institution that hitherto doesn't exist in India, so to say. But let's try and understand how do people view commercial real estate as an investment destination, and how can institutions like you get in or mobilize some of the capital that people might want to do?
Sure, thank you, Neeraj, for having me. Great question, to begin with. Let's talk about the appeal of real estate. I would say after gold, real estate has the universal appeal in this country. 99.99% of investors want to access real estate. Until now, as an investor, what could you do? You could access maybe residential, right? You could buy land, you could access residential, that was available to you. But unknown to you, a very large asset classes got built out over the last 10-15 years in India, which is commercial real estate, and of which office is a large segment, and then there's warehousing, and there's retail, hospitality, and so on. This asset class, Neeraj, today is $140 billion in size. Office only is 100 billion, of which that doubles every 10 years. Now the beauty of this asset class is it is globally relevant. What do I mean by that? India office consumption is 50% of Asia Pacific consumption every year. Just to give you a sense of size and scale, a city like Bangalore over the last 5 years has consumed as much office space as Shanghai. So that is the relevance, that is the size. Until now, as an investor, you had very few options to access and invest in this asset class if you are an Indian individual investor, right? Until 2018-19, when the REITs came, all you could do was invest in this asset class by buying out units, small retail outlets, office spaces, and so on, which come with their own issues and problems. REITs came in 2018-19, and now we have 4 REITs listed, about 80,000 crore market cap. You have 4 options only available. Liquidity, good return profile, reasonable return profile, and that's about it. The asset class is so large, largely invested by foreign institutions. Indians are kind of excluded from this. So that is the endeavor we have, is to bring access to our investor base to an asset class which is as large, so institutional and liquid also.
Establish that it's large, establish that now with paper investments possible, it's liquid as well. One, what are the kind of returns that can come in through something like this? Are these lumpy in nature or linear in nature? And how liquid are these?
Right. So like I said, the asset class is very large. And because of the nature of this asset class, let's talk about office, because that's the largest part of the asset class. So grade A prime offices today will yield you anywhere between 6 to 8%. Right? That's an annual yield. Stable, real asset based, there's a good quality tenant profile. So that's the earning profile of this asset. Now your risk or return will vary as to when you come in to this asset class. You come in at the land stage, development stage, near completion stage. Are you assuming leasing risk? Not assuming leasing risk. So let's consider REITs.
But that is for somebody like you, right?
Yeah.
Or not from an investor who invests into the fund. They are investing into your fund independently.
I'll simplify this. If you are coming into a REIT, your return profile is about 10 to 12% pre-tax.
Okay.
With about 6 to 7% yield coming to you every year. Right?
Okay.
Because REITs are allowed to invest largely in ready assets. A small percentage can be in under construction, but largely in developed assets, and they have to pay out a large chunk, most of the net operating cash flows that accrue to them. So that is your most liquid, most institutional, largest asset class available, which is easily accessible.
Right.
Now you go into what you call private investing, which is what all the funds have been doing in this country, is to buy out leased out ready assets or about to be ready assets, and then see how you can upgrade the tenant profile, upgrade the cash flows, bring efficiencies in, and eventually sell down in the market. right? That is the private investing part of it. Returns can be lumpy. You have to assume illiquidity, so you may not be able to exit out of that. So that is what it's called category 2 alternative investment fund, AIF in India. And therefore you are invested for about, let's say, 6 to 8 years, and your return or your cash flows could come to you 4th year, 6th year, 7th year, and so on. That is what you are assuming, but you are likely to receive a higher return profile for assuming this risk. So your return profile could be anywhere between 18 to 25%, depending on the nature of the product that you invest in.
Got it. Okay. Okay.
Yeah.
And how do investors invest? Let's say you are building out a product. People trust your brand. People trust you because you've been around. How do they invest into something like this?
See, to the end investor, it's very simple. You can just invest a minimum 1 crore into.
Minimum is 1 crore.
1 crore.
Independent of the investor, because there's some talk that an accredited investor can get a slightly lower check.
Yeah, true. But that's really not, a very large base of investors today.
Okay.
So for most people in India, they can come with a very large base of investors today.
Okay.
So for most people in India, they can come with a minimum 1 crore rupee investment into a product like us. And I think the key here is because there are not many good quality managers or good supply is the problem. Demand is, like I said, infinite perhaps from our investor base. Supply of high quality solutions, good quality teams out there. So that is the risk assessment that the investors have to do. The suitability of the product, suitability of the manager, credibility of the manager, reputation of the manager. So I think those are the more important points for you to consider. Minimums are only 1 crore now today.
Okay, for now minimum is a 1 crore. Okay, and large, a couple of other questions. One, is the demand largely towards office space per se, or in products like yours, the demand for some of the other residential or real estate projects are also picking up?
See, per se real estate is a very vibrant market right now, right? Residential, we all know, is doing very, very well. Every month we are seeing month on month records are being broken in terms of the total supply and absorption of the market. All the real estate developers are doing very well. RERA has helped, right? So regulatory regime coming in, the right market environment, everything is working well. So is the case with commercial real estate. Actually, that is where global demand comes into play in a country like India. 25% of that is global demand, what you call GCCs, right? GCCs now are 25% of the market today. But in India, what is happening is, it used to be an IT services play earlier. It is now moving from IT services to GCCs and a lot more broad-based Indian consumption, as in Indian corporates wanting to get the best quality workspaces for their employees. So BFSI, manufacturing, and other pharmaceuticals, chemicals, and other companies want to get the best quality space, like I said, for their workforce.
Got it. Okay. My final question, Anshu, and that is, because this is more an HNI product, if you will, do you see at some point of time this becoming a mass market product as well? Could regulations evolve?
Yeah. So actually regulators are doing a very good job out here. So there is this SME REIT proposal and guidelines that have come out. So conceptually, REIT needs a certain size, let's say 1 million square feet minimum for anyone to launch a REIT. So it needs size, it needs that scale, organization, capital, so on. But now what is possible is at a smaller level, 50 crore kind of a level, you can have a SME REIT. So think about financializing of real estate, commercial real estate in India is going to be possible. And office is the beginning, like I said. There is warehousing, the whole logistics play, hospitality is very large, retail is going to be very large in this country, and then will be data centers and so on. So it will start with the biggest, most liquid market, and in my opinion, go down into a lot more larger asset classes as we evolve. So you as an investor can pick and choose. You want a hospitality REIT, you want a small REIT, large REIT, or you want to get into a private fund like what we offer.
Got it.
So you will have choices.
Interesting. And I presume that a higher ticket viewers would mean that the probability of getting into the fund is higher and all across asset classes, and therefore you have the choice of choosing a fund with the risk and return profile that each of those individual products, whether a REIT or a fund, is to offer. But Anshu, this was nice and informative. Thank you so much for joining on this leg of Profit Insights.
Thanks a lot. Thanks for having me.
The pleasure was ours. Viewers, thanks for tuning in. Hope this helped. Stay tuned to NDTV Profit for more news and updates.